Which mortgage is better, 30-year mortgage or 50-year mortgage? I get this question a lot from buyers and then refinance buyers. So which is better? Well, it depends on your personal financial plan, right? So we'll talk about that in a minute. Hey there, this is a KG. I'm a realtor with Fairfax Realty in Greenbelt, where we help buyers to buy their dream home and sellers to sell their houses. And we do this in the Maryland, DC, and Virginia region. So if you're looking to buy, sell, or move into this region, contact us below. And if you're looking to move out of this region, definitely contact us. And please subscribe to the channel to get updates once we upload new videos about what is going on in real estate. And please drop a comment because I would like to read your comment. All right. So the question is, which is better, 30-year mortgage or 15-year mortgage? Well, it depends on your personal financial plan and what you're trying to achieve, right? But 99.9% of time, when you apply for mortgage as a home buyer, as a first-time home buyer or repeat buyer, it doesn't matter. What you're presented with is 30-year mortgage. That is not the only option, right? There's 30-year mortgage and there's 50 years, but there's still some others in between those two. There's 20-year mortgage for conventional and there's 10-year mortgage for conventional as well. So don't just settle for 30 years because that's what's presented to you. Look at the other options that you have and you kind of decide. But more importantly, I want to discuss the pros and cons of going with 30 years and 50 years, and then you kind of decide which is better, because what is better for me may not be better for you. So when you know all the ins and outs of both of them, then you can make that decision. So let's talk about the pros and cons of a 30-year mortgage. I have a presentation that I'm going to share my screen. So 30-year or 50-year or 15-year mortgage, which is better? Well, like I say, it depends on what you're trying to do. So, but let's break it down. On a 30-year mortgage, what are you doing? On a 30-year mortgage, you have longer time to pay the loan. You have 30 years to pay the loan. Everything being equal, you pay your mortgage every month, you will pay it off in 30 years. Because you're taking that money for longer term, you definitely pay more interest rates over the life of the loan. You're using that money for 30 years. So then the lender that is giving you that money has to make money. So that's why you pay more interest rate. And then at the end of the loan term, when you look at your loan amount and the amount you pay in interest, you're paying more for the loan, right? So what about 15-year mortgage? So 15-year mortgage, you pay off the loan quickly. Of course, it's like 50% off, right? From 30 years to 15 years, you pay the loan off quickly. Because you're paying it off quickly, you pay less in interest over the life of the loan when you compare it to 30-year mortgage. Because you pay less at the end for the interest, you definitely pay less for the loan combined principal and interest when you compare to 30 years. And for 15-year mortgage, you always get lower interest rates. Yeah, because you're holding the money for lower time, the interest rate is lower. But how does that translate? Let's break it down. I'm going to use a scenario. So here's a 30-year loan, right? Here's a 30-year loan. So this rate is from one of my lender from their rate sheet for today, the rate sheet for today. So on a 30-year loan amount, this is just the loan amount. I'm not talking about the down payment you're putting down, and I'm not talking about other things combined with the loan, right? This is just the loan amount, 500,000. The interest rate is 2.65. The monthly payments, which is the principal and interest only. I am not including the taxes and insurance. I am not including the private mortgage insurance, which you will pay if you don't put 20% down. So I'm not including all that. This is just the principal and interest only. The payment for that 500,000 loan amount will be 2014. Right? So at the end of 30 years, you pay your mortgage monthly for 30 years, you would have paid 225,000, 200,025 at the end of that 30 year in interest only. just on interest only. Now, when you look at the loan amount and combine it with the interest you paid for 30 years, the house, the mortgage of 30 of 500,000 will cost you 725,000 at the end of 30 years. All things being equal, you did not refinance, you did not take any money out, you just stayed in that house for 30 years and you pay. At the end of 30 years, the loan amount will be 700,000. I'm sorry, the house will cost you 700,000. So, whew, this interest rate is like, okay. But anyway, let's look at 15 years, right? The same loan amount, 500,000. Remember, I said the interest rate is always lower in 15-year mortgage? Yes. So for this rate, this is the rate for today for 15-year conventional loan and VA loan. Yeah, an FHA loan. The interest rate is 1.750. The principal and interest only is 3,160. That's just the principal and interest only. At the end of 15 years, you pay your mortgage monthly for 15 years, you would have paid 68,000 in interest rate. Yeah, 58,000, 68,000 in interest rate. When you look at the loan amount plus the uh, interest rate you pay, at the end of that 15 years, the house will cost you 568,000 principal and interest only. Wow. So when you let's look at it side by side, 30 year and 15 year. So here it is, 30 years and 15 years side by side. The same loan amount, definitely different interest rate because interest rate is always different. So let's look at it. The loan amount is 500,000. The payment for 30-year loan is 2,014. The payment for 15-year is 3,060. The difference is 1,145. That is a lot monthly for some people. That's why people opt for 30 years. So that is the difference. The interest rates after 30 years is 200,000, 225, right? The interest rate after 15 years is 68,000. It's not even half of the 30 year. That tells you, right? So the difference in interest rate is 156,000. Woo, that is a lot. This is one of the reasons why people really do not want to look at the amortization schedule when they are closing to see how much the loan will cost them at the end of the long term. Is kind of depressing when we're in closing table, like, oh my God, but that's what it is. So if you take a 30-year loan for a 500,000 mortgage, you're going to pay 200,000 in interest only. When you compare that to 15 years, you're not even paying half of that. You're just paying 68,000 a year. But do not be dismayed because there are other options, right? So, like I said, which is better, 30 or 50 year? It depends on your personal preference, financial preference, what your goal is. So let's look at the other options that you may have. So remember I said 30 year and 50 year are not the only options. Generally, you get 30 year, that's what is put in front of you, 30-year loan. But the other option is 20 year. You can do 20 year. If 15 years is too much for you to undo, maybe you can look at a 20-year loan. If you say, oh, I have money, I just need this loan for a long, shorter time, I don't want to do 15 years, you definitely can do 10-year loan. There's option for that. But generally, most first-time home buyer, most buyers, not just first-time home buyer, generally go for 30 years loan because they may not be able to afford that payment of extra payment on 15-year loan. But if you want to pay quickly or if you want to pay less in interest, there's still options that you have even when with your 30-year loan. So what am I talking about? Look at this. So on a 30-year loan, if you say, okay, I can only qualify for 30 years now, what do? I want to pay off quickly. You can do extra payments monthly. Can you afford 200,000? If you do 200,000 extra monthly, your interest that you pay over the life of that loan will be reduced by 32,000. If you do 400,000 interest, 400,000 extra payments, extra payment additions to your mortgage, you can reduce that interest by 56,000. Now, if you don't have that and you're just waiting for the end of the year to get tax return, if you can do one extra monthly payment a year, you will reduce your interest rate by 28,000, right? So, but a word of warning, if you send that money, if you're making the extra payment, you want to make sure you designate it to go towards principal. Otherwise, it's going to go towards interest and defeat the purpose. So when you are making extra payment, make sure you designate it to go toward principal. So that being said, which is better? That being said, which is better? 30-year or 15-year mortgage? It depends on your financial goals, right? So you may start off with 30 years and then refinance to 15 years. A lot of people do it. That's what I did. When I bought my house, I started with 30 years. A few years later, I refinanced to 15 years. So that may be an option for you. So if you can only qualify for 30 years right now, do not be dismayed. If your goal is to pay off this loan quickly, do not be dismayed. Just either pay extra monthly in towards the principal or wait a few years, you get a good interest rate, refinance to 15 years. So, but if your goal is, I'm just going to be in this house a few years, I don't care if it's 30 years or whatever, I'm going to be just here for a few minutes and then upgrade or go to somewhere else, and I'm not really looking to pay it up, then definitely do 30 years and be able to move. So which is better depends on your goal, but I want you to be informed, right? I want you to be informed. So when you are getting qualified for a mortgage, ask the lender, show me other options, show me what it will cost me if I do 15 years, show me what it will cost me if I do 20 year or 30 or 10 year, or yeah, 30 years, 20 years, 10 years, or 50 years. Tell them to show you so you make informed decision. All right. So we're saying if you're looking to buy, sell, or move, definitely I'm your girl. Contact me below. And please don't forget to subscribe to the channel so you get updates once we upload a new video. Have a good one. Next week will be another question. All right.